Facebook, good morning. Good morning, good morning. Another week. It's Monday. And we're going to come with another question that I think is a really important one to answer. So today we are going to be talking about what nobody tells you about technical analysis. So what no one tells you about technical analysis. So before I get into a little bit of detail, the reason I wanted to talk about this is because a conversation came up in our trading room last week about how we use technical analysis really in a different way to other people. And I remember one of our recent students who is actually looking to go full time, and he was saying one of the things that really changed it for him is when he was learning our technical analysis process. He realized that what we did differently is we made the technical analysis that you use and the process of analyzing a chart specific to the type of trade. And that was something that he said was a big change for him because he was able to learn it very specific to the type of trading he's doing. So those of you that are relatively new to trading, technical analysis is essentially a form of analysis of a chart where you were using technical tools like trendlines, moving averages, MACD indicators, support and resistance lines, Fibonacci. So you're not looking at the fundamental issues or fundamental components of, say, a company or an economy. So you're not analysing the news, you are not analysing the company's performance. You are essentially using the charts, supply and demand patterns to make your decision. Now the challenge with technical analysis, one of the things that that no one really tells you is, first and foremost, is people are going to challenge you when you tell them you use it. So they're either going to challenge you and say something like technical analysis doesn't work, or if they use technical analysis and you use a certain element of it, so let's say you use support and resistance, they'll turn around to you and say support and resistance doesn't work. And you need to be using supply and demand areas, or you can't use moving averages, you need to use Fibonacci retracements. So you either get people taking the broad camp where they're either for technical analysis or against it. So that if you are using technicals, and I've had this said to me so many times, ironically by people who don't make money, saying technical analysis doesn't work. Well, the first thing that they're doing is they're generalizing. But then, when you start talking to people who do use it and you say, oh, I use support and resistance lines, they're saying support and resistance lines is old hat, or support and resistance lines doesn't work. You need to be focused on supply and demand areas, which are essentially the same thing. Or the way you draw trend lines is not right. So one of the things no one tells you is that there is so much generalization around either whether technical analysis works or doesn't work, or a certain element of it works or doesn't work. So you need to be prepared for that. The second thing is and I've seen this so many times, is people will have an expectation. So a lot of people will read a book and they'll see examples written by an analyst or sometimes a trader, but a lot of trading books aren't written by out-and-out traders. And they'll have shown you 5 examples where the specific tool or process that they have told you works perfectly. So no one tells you that a lot of traders, and no one tells you or prepares you, I think is a better word, for understanding emotionally that whatever technical analysis process you have, whether it's trend lines, support and resistance lines, moving averages that I use in line with support and resistance lines, no one tells you or prepares you for the fact that it's not gonna work all the time. And so many traders will use a process and they'll have 3 losing trades off the back of using that technical analysis. And then they'll go, trend lines don't work, or support and resistance lines don't work, or the way that Ali teaches this doesn't work. And it's this idea, again, of thinking too short term, and as a result of thinking short term, again they start generalizing. So no one really prepares you for the fact, no matter how simple or complex or whatever technical analysis tools you use, there's going to be periods where it doesn't work. And also no one prepares you for the really the disproportionate way that you will analyze the result of your technical analysis based on the result of the trade. So for example, one of the things that we do in our trading room is we get people who are in there and students that are in there that when they have a losing trade to ask themselves whether or not they were overall right on direction. So did their technical analysis process mean that overall they were right, but the challenge with that technical analysis process is the strategy criteria, the specifics that got them into the trade were the things that caused them to lose. So it might be that their stop, the trade came down, hit their stop, and they were taken out of the trade, and then they say, using support and resistance doesn't work. When in fact, on that particular trade, on that particular market, it was actually the size of their stop that caused the trade to lose. So again, it's that differential between, did your technical analysis process mean you were right on the overall direction? So price came in, hit a level, and you were right that price changed. It just happened that you got clipped out of your trade and then it went the way that you would have wanted it to. So this is a huge distinction, and nobody tells you about this idea that just because the trade lost doesn't mean that your analysis process that got you to take the trade was wrong. It was simply the type of strategy that you've got, i.e. where your stop and your target and everything else was the thing that caused the result. So there is a link between obviously your analysis process and your results, but it's not as simple as just to say, if I'm winning, that my technical analysis must be right, or if I'm losing, my technical analysis process must be wrong. So that's really important. So I think this big thing of your goal with your technical analysis process is not to be right 90, 80, or even 70% of the time. My fundamental swing strategy has a win-loss ratio of 50%. So I'm right 50% of the time. And that, on my analysis, so I'm right on direction about 60, 70% of the time, but some of the trades stop me out and move that way. So understanding that differential means that you go into your analysis process, learning and crafting it off the back of not wanting to necessarily be right every single time. So a lot of people say something doesn't work because they hit a 3-trade losing run, a 4-trade losing run, or they're only right 30, 40, 50, 60% of the time. But what they don't realize, I should say, is if they were managing their risk correctly, they would still be profitable. So there's that. So just be wary and understand this. Nobody that I know out there is saying this, that every single trader has to make their technical analysis process their own. And you can't learn technical analysis within a week. So it looks on a lot of scenarios, it looks very cookie cutter. So you just do this. Where in fact, technical analysis is a craft. It's the art element of trading. I always say that your strategy criteria is the science, the proven methodology, and your technical analysis, as in terms of where you will trade that strategy, is the art. And it takes time to learn it. And it's so important that you don't go into technical analysis just thinking that after doing it a couple of times, you're going to be successful at it. So really bear that in mind. Don't deal too much in absolutes with it. Understand that it's a craft and it is a process. And then I would say lastly, make sure you don't get into that issue where you link the pure success of your results down to your analysis. Because remember, trading is more than just the technical analysis process you go through. It's the data, it's the mindset, and it's the risk management as well. All right, so that's all I've got for today. We'll be back. I think I'll be back with you in a couple of days. Trade safe. I'll catch up with you soon.